Good morning, everyone, and welcome to the European crossover webinar. And we have seen the euro take an additional little dip. Actually, it looks like we're coming in right where we have our bias chart support. Just took a little bit dip beyond from what we have for bias chart support for today. And same thing here with cable, a little bit of an extra dip here. I think we're coming into a little bit of support area here. And then we'll take a look at the cash dollar index. And just poking its head above here. And yeah, it got a little bit of a rant the other day on Twitter because someone was had pointed out the dollar's up because the market is down. And I thought that was so stupid. And I kept saying it's not because of the coronavirus returning back to Europe. Well, we've seen a pretty good rally in the market. So why is the dollar index down? Yeah, exactly. So anyway, like I said, I shared that we talked about it in the chat on Friday afternoon, posted the story of the weekend. I mean, the only thing that I feel stupid about is I didn't take a euro short in Asia when it was up on Asian Sunday evening when it was up 20 pips, trading close to, I think it was like 1870 or something like that. And it was up 20 pips. Should have gone and taken a short at that time. I just didn't bother go and put in a position. I should have just done on it just for the heck of it because we were still up way near those highs. But anyway, like I said, that was my point. Dollar being up had nothing to do with the stock market. That was the silliest thing I ever heard of. Let's see. We'll take a look here at the Aussie dollar. And also down here towards its lower end. We'll go on and take a look at the economic activity for today. See what's on the horizon. Okay, so we got PMIs here. We did get consumer sentiment here out of Germany. A little bit weaker than expected. GDP for Spain, not as bad as they thought. PMIs for France, pretty much in line. German PMIs, a little better than expected. Eurozone PMI 53.7 versus 51.9. At the bottom of the hour, and then Eurozone, as I just mentioned, 53.9 versus 51.9 for the Reuters poll compared to last month. Definitely better improvement. UK PMIs at the bottom of the hour, expecting 56.3, with Mexican retail sales at 5 a.m. Eastern. And monthly home prices at 9 a.m. Eastern, so nothing until 9 a.m. Eastern in the States. And composite flash PMI at 9:45 Eastern. Okay, we have the Aussie up. I'm just going to put that here. So it's a little bit further dip. Australian dollar weakens, bonds rally on rate cut bets, and the New Zealand dollar softens. The Australian dollar hit a 6-week low on Wednesday amid growing speculation or expectations for further monetary policy easing. As soon as next month, while its New Zealand peer weakened as well after the country's central bank left the door open for more cuts. The decline came after a speech by Deputy Governor of the Reserve Bank of Australia, Guy Debelle, where he signaled the prospect for further easing. Losses in the Aussie further accelerated on Wednesday when Westpac economist Bill Evans revised his call to forecast a 15 basis point cut to cash and the 3-year bond yield target to 10 basis points for the October 6th meeting. Other analysts include the National Australian Bank and Singapore TD Securities are also predicting monetary easing measures next month or two. RBA's Debelle gave a fairly clear hint that the board is set to cut the cash rate and key policy rates at its October meeting. Bonds rallied on Wednesday with the 3-year yield slipping to 0.18% from just under a quarter basis point. And across the Tasman Sea, the New Zealand dollar was off 0.4 at 66.07, a level that was last seen in late August. Early New Zealand Central Bank held its official cash rate at a record low and hinted at further easing, while warning the economy may need support for a long time as the world grapples with the coronavirus pandemic. The RBNZ also retained large-scale asset purchases program at 100 billion Kiwi dollars, which is 66.2 billion translated into US dollars. It added further stimulus and may be needed that it was prepared to add additional tools like a cheap funding facility for banks, negative rates, and the purchase of foreign assets. And the dollar rises on coronavirus unease, Aussie and Kiwi hurt by rate outlook. The dollar rose against major currencies on Wednesday, supported by positive U.S. economic data and foreign concerns about a second wave of coronavirus infections in Europe and Britain. Isn't that what I said this weekend? Isn't that what I said on Monday? Had nothing to do with the stock market. So we've seen a rebound in the stock market, yet the dollar index is still higher than it was on Monday. So, case in point. Both the Australian and New Zealand dollars were undermined by a dovish slant on policy by the respective central banks. They also hit a 6-week low on growing expectations the RBA may cut interest rates next month. The Kiwi edged in choppy trade after the central bank kept monetary policy unchanged. Some people are betting for more dollar strength against the euro, which looks overvalued, said Masafumi Yamamoto. The picture in Europe has completely changed because the economic recovery is stalling, and there's a second wave of virus, but also worried about the U.S. Politics. And in my analysis that was over the weekend from Monday, stated that the return of the coronavirus is potentially whether the euro is going to go and pull back, and due to the coronavirus, the potential for the economic or the economy to go on and stall. So there you have it. I was here a few days late after it's already fallen quite a bit, but now they say that that's the reason why, and not because of the stock market. Well, of course not, because now the stock market's up, so they can't say that, well, it's down or the dollar's up because the stock market's down, because the stock market's rallied from Monday's lows. So that doesn't make any sense, so that's why they have to say that. On Tuesday, the greenback was bolstered by the data showing U.S. home sales surged to the highest levels in nearly 14 years, but comments from a prominent Federal Reserve official set mixed signals. The U.S. economy risks a longer, slower recession recovery and recessionary dynamics. Many Eurozone countries have reintroduced travel restrictions, foreign airlines to scale back passenger services, relative quick run up over the summer. And enough of that. And just one little extra story. A little help from our friends. Banks team up as FX trading gets tougher. Faced with the cost of competing in a world of electronic and algorithmic trading, many banks are outsourcing parts of their foreign exchange businesses as trend that may cement big lenders' dominance of global currency trading. Loose informal relationships where smaller players rely on bigger peers for the best prices and the liquidity have long exited in the $6.6 trillion a day FX market. But as high-tech trading supercharges competition for the fastest speed and tightest prices, more formal tie-ups are becoming common. Given the importance of the Forex to corporate clients, few banks would opt to go drastically reduce FX operations the way they would with equities trading, for example, they are choosing to pull back from areas they cannot compete but still want to sell to the customers. UK and European banks have had set focus on areas of strength. The inevitable consequence that is to look for partnerships. Naturally, it makes sense to subcontract some trading, said Simon Mannering. This can involve accessing liquidity provided by multiple other banks or formal agreements to rely on specific institutions for certain currencies or during a specific time of the day. While outsourcing constitutes a small number of NatWest trading volume, Mannering said it makes sense for currencies or time zones where the bank has little geographic presence. The opacity of the FX markets makes it impossible to measure the scale. The practice, which is often called white labeling, because the client always trades with and has the exposure of their other bank or their own bank. But what is clear is the growing concentration of trading FX market shares of the top 5 banks, rising at 41% in 2020 versus 30% in 2016. There are real hurdles to clear industry. Insiders say conversation often leads to nowhere, while formal agreements between two institutions are particularly tough, as banks and clients balk at exclusive arrangements that restrict their ability to trade with others. I'll go and post this if you want to see that, but I'll post that on Twitter later. So that's going to be that. Pedro says, please look at gold. Thanks. Okay, we'll take a look at gold. Yeah, we'll get into gold real quick now. Pedro, hang on a moment. We didn't take a look at equities, so we'll just take a quick look there. And you can see we've had a pretty nice little run back up in equities. I mean, yeah, it was a pretty good little sell-off. And that was my point, is we've been falling and falling and falling, and the dollar just woke up on Monday, despite how much we've fallen. And on Monday, it woke up. Okay, now the dollar's rallying because of the stock market. The stock market's been falling for 10 days. But we did see a nice little rebound, and we're actually close to those highs right now. But we'll go and take a look at gold. Oh, actually, there's support here in gold. Interesting. Let's see if these are still valid. I haven't paid much attention to gold for a while. Let's see if that's the highs, 2089. Let's see if that's still. Yeah. So 1863, which it never got to, is at 38% of the move from 1497. Yeah, that's actually because it's December. We're no longer in August. So the low's 1497. And you can see here that the lows set in March, the VWAP comes in at 1840, and then 1862 is going to be the 38%. And 1875, my guess is, they may bounce, but we're probably going to overshoot this a little bit. And let's see here. It's 1842. Basically 1844. There's probably some people that bought on this break, so we'll probably have to break a little bit more to spook them out. and 1863 is at 38%. And generally, we'll overshoot. So that overshoot would take us around 1844 ish, maybe even a tad bit lower. Because if you look here, we'll have a zone right here. Right there, which would be 1827. And you might, because the dollar is stronger right now, and like I told you, that has to do with the euro and the pound, the weakness we're seeing there. Now, the pound was already weakening, although from higher levels before, because of all the Brexit, the whole crap with the European Union. I'm so sick of that story. It's so old. But anyway, that's why it was going lower. But it actually went even lower. Then continue that drive lower with the coronavirus concerns, and then Boris Johnson announced lockdowns, but those lockdowns were already expected to be coming. Were already expected on Monday, although Boris Johnson made the announcement, or what do you want to call it, Tuesday. But anyway, that being said, we've got a nice little zone here between 1844 and 1827. I would look for us to make it down here to 1863, and there might be a bevy of stops just below this area. So probably around here, if you look, see right there, that little stab area here, that's 1866. So 1866, 1863 is 38%. We overshoot it, come down here, and then you'll be coming into VWAP from the March lows. So this whole area around 1844, I'd look for somewhere down there. And we'll have that little zone there between 1827 to 1844. With that, let's move into the analysis. And bear with me. I'm going to open up the bias chart, but I want to open up another window because sometimes the cash equities start trading in the after hours. Then I can't see what's going on because I have the chart with the FX, and that can be very frustrating. So hang on, I'll just open up another window. I'll do the analysis on that. That way, if things are moving, there. And I have the same window opened up, so that way, if I start seeing the jump, like I'm seeing here, Facebook is at 255, which is higher. Not seeing too much other activity here. Microsoft at 207.5. So anyway, let's just be frustrating. When yesterday we were seeing moves, and I'm like, I can't see it because now I've got the whole thing, the whole page pulling up. So here we go. Let's just go and move into. So just duplicated this chart and moved it into another window, another screen. So here we go. Let's go here to the Eurodome. Of course, now that I did that, nothing's moving. Nothing's moving in the after hours, but it's been a problem for me over several days when markets are moving. We've been dipping like that, and I can't even see that. A couple of these are really moving around in after hours. You can see we've had a pretty good range. Look how low Apple has gone down to 103 on Monday, and look how high we've been up here, 113. Now I've opened up the page. Look at that. We're dead as a doornail. Go figure. It never fails. Going with this here. At least going forward, I'll do it this way. Frustrating when markets are moving. I'm over here doing analysis. They're not moving now. So like I said, now that I've made preparations, now they're not moving. Let's go into the daily chart. Okay, take a look at the euro. So the euro continued its slide on Tuesday. Support on Wednesday will be 1680 with resistance at 1770. And you can see here that the low today has been, I'll pull this up a little. There we go. So the low has been 1671, and we're kind of pushing back up towards 17. So 1680 on the downside, 1770 on the upside. We're moving to cable. Cable remained weak on Tuesday, closing at the lows. Support on Wednesday will be 2652 with resistance at 2780. Okay, and on to the Aussie dollar. So the Aussie corrected further on Tuesday. Support on Wednesday will be 70.90 with resistance at 72. To the Kiwi. This is awesome. I can now see all the other charts now with the other cash equities. Too bad they're not moving. But now I can see them. Let's go into the Kiwi. Kiwi closed lower on Tuesday, albeit above the bias chart support of 66.01. Support on Wednesday will be 65.79 with resistance at 66.70. On to the dollar CAD. The dollar CAD rallied on Tuesday, challenging 33.34. Remember, we had that as our secondary resistance to start out the week. We had 32.68, and we said on the followed by 33.34. They did poke their heads above it yesterday, and then they paired back a bit, and now they're kind of reassaulting that level. The pair is a bit stretched. Resistance on Wednesday will be 33.57, so we'll give a little bit more room. With support at 32.45. Onto the peso. And this thing has been bananas. I can't believe this. Look how much we've rallied. I mean, this is huge. And it's still even already taken out the other resistance that I had for, from the Asian session. It's crazy. The dollar peso is screaming higher. Resistance on Wednesday will be 21.82. 21.82. Now you have to come right here. Now this is going to be resistance, and that's going to be pretty good resistance. 21.92. But look, they've already blown through 21.82. So let's go on and get this. It's going to be 21.92. Man, this is bananas how much this thing is rallied. I mean, this has just cleaned everybody's clock out that was short. And resistance will be the 21.72 for right now. What a sell-off. Let's go right here with right there. That will be 21.76. This has been something else. They have just, oh my God, anybody that stood in the way, they just got ramrodded. Let's go and move now to the dollar yen. So yesterday we had a resistance of 495, but they did get up to, well, that wasn't bad. They got up to 507, and I had 495, so that wasn't too bad. And then they backed down and closed at 492, but they've reasserted themselves here. Resistance will go, you see this low here, right there, which is, oh, not bad, 520. And I think that's why they ran out of gas. Because you can see here, you got this low, and then you got that one right here. So it offers like, okay, they bump up against here, and then they got one more here, and that comes in right at, actually comes in right at 518, 518. So we'll go 518. And for support, let's go to the 2-hour chart. See right here, that's coming across. You get some good touches across there. So let's go with this, which is going to be a 485. That's a bit tight, but we'll leave it there. Let's go to the cash dollar index. The dollar index pushed gains further as the euro weakens. Resistance on Wednesday will be 94.33. We're support at 93.68. And 1 minute till UK data. PMIs. Let's go and move into the cross rates. So we're still continuing to push lower here in Kiwi Yen. We had 69.46. We actually pressed lower here. You see right there where that open is, and got some nice touches. We'll go right there with, that's going to be 69.08. Holy smokes. Well, that's where there's some good volume coming in right there. So we'll go to 69.08. This isn't too bad because yesterday's low was 69.42, and we had 69.46. So it'll be 69.08 for today. Some good volume comes in there. Resistance. Let's go to 2-hour chart. Will that be resistance? Right there. See they coming across it here, so it's going to be 69.76. It may be a little bit high, but if they were to turn things around, that would be where they would run into trouble. To the euro yen. Whatchamacall on NASDAQ just pushed to new highs. Right now, we're at 11,180. Well, it's not new highs yet because we were actually there a little while ago in Asia. So the high was 11,190. So we're just about not too far away from there. Looking at the euro yen. And Apple is at 111.83 right now in after hours. And that's what I'm saying, the importance of being able to see other things in there moving. And I'm not over here scratching my head going, oh, wow, the NASDAQ's higher. I wonder what's going on there. Euro yen. We had 22.23. Oh, that's still good. 22.23 and 23.79. No changes on euro yen. And you can see here we're trading a fairly tight day. We're going to euro odd. The euro had rebounded to close above the prior Tuesday's close. Oh, no, oh, that's old. That's from this weekend. So, what was our resistance was? Wow, we had a pretty good move. So we've already taken out the resistance, which was 63.40. We've already challenged. Look at that. So yesterday we got above it, but we did close back below 63.40. But look at the way we've asserted ourselves. But that's because the Aussie's weaker, because of potential for some additional action from the RBA. So we've definitely pushed higher. We're at 64.10. I'll tell you what, you see where this market opened, and then we closed, and then we open here, and then you see this bar coming down here. So let's go right there, which would be 64.28. So let's go with 64.28. Because they probably did goose some stops at this level, but they haven't pushed too much higher. So it's going to be right there at that high, 64.28, and then support. Let's go to a 30-minute chart. Okay, right there. So that's going to be support, which is going to be, that might be a bit rich, right there, 63.69. It's still a little bit rich, but we'll leave it there. Let's go into the Euro QE. We were looking at 77.15 yesterday. The pushing not to the same extreme that the Euro Aussies, but the Kiwi's been stronger of late. Okay, you see right here, all these touches coming across there. You see that? We'll go with that. which is 77.52. That shows you that there's good volume there, all those touches. And on the downside, you see 76.37. We'll just take the high there on that bar right there. So 76.56. And the ASEAN. Pretty good little fall here, but we are coming into some decent support here. Let's see what we had from yesterday. We had 74.84, and that's where we're at, 74.84. But just a little bit of an overshoot. So let's pull this back, and here's what we're looking at. See these touches coming across? You see that? And then this body right there. So let's go with that, which is 74.65, which isn't too far from where it's at right now. 74.65. And resistance, we're going to go with that, 75.23. Oh, actually, yeah, 75.23, that'll be good. Go with that, in case we get a rebound. On to the guppy. Pretty good fall. Let's see what we had yesterday. We had 32.97. Okay, I'll keep the 32.97. That even seemed a bit of an extreme, but we'll keep the 32.97. And on the upside, if we do get a rebound, 33.96. Lastly, sterling odd. At 78.95. We'll stay with the 78.95 because sterling's so weak. And the downside, you see the opening here on this body right there? It's going to be that, 77.01. And that'll do it for FX. And we can take just a quick look at equities. I just closed off that page. So you can see here we're pushing higher here. Just above this level 176. Looking at it on a 2-hour chart. So I think yesterday when we rallied, not only did we take out this trend line here, a little bit longer term trend line. Remember, we were taking out the 30-minute trend line the previous day. I think we got some medium-term shorts to close out yesterday. Well, I guess for me, looking for a medium-term, they may still not be willing to close unless we get up to here, but I'm talking medium-term for me. I'm thinking they got clipped out yesterday. That's why we saw this market stay on the bed. So today is going to be in this little range here. I don't know. Maybe they'll punch in here and hang on because we've already had a pretty good run with equities. Let's take a look at this boost. They have a little target they can go to, which is here, which is 33.25. Well, they can work a little bit higher. You can see here they held that, ultimately ended up holding that VWAP from June. So that really should be able to give them an extra little boost. NASDAQ, the same thing here. So, I mean, even if you bearish, you probably want to wait for them to rally further. The real test is probably just going to be this 11,262. So we don't even get to the 38% until up in here. So we'll see how much further we can move. I mean, it's quiet trading right now. There's no real movement. You can see here, we're dead in the water. Lots of times at this time, things are already starting to light up over the course of the last 35 minutes with after hours trading, and we're just dead in the water. We're not even doing a damn thing. Oh, it doesn't look like we have anything to do until the U.S. session. But that's all we have for today. Thanks for joining us in the European Crossover webinar. Post the chat, post the bias chart, and see you then. Thank you.